This week could become one of the most important weeks for SoFi investors as the stock prepares to react to fresh economic data, key technical levels, and a series of events that could shape its direction going into the next month. With several market-moving indicators scheduled, and with SoFi approaching crucial points on the chart, the upcoming days may determine whether momentum continues or slows down. Let's break down everything affecting SoFi and what traders will be watching extremely closely. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell. But before that, this is not a financial advice video. The first major focus is the macro environment. The week opens with a series of manufacturing data reports. Forecasts currently expect the reading to come in at around 48.8 compared to the previous 48.6. Since manufacturing numbers above 50 indicate growth and numbers below 50 reflect contraction, this report will play an important role in shaping early week sentiment. In addition, Federal Reserve members will still make appearances throughout the week, even though the central bank is in a blackout period. That means no direct monetary policy comments from the Fed chair, but other members may still influence market volatility through general economic remarks. On Wednesday, the market will watch mortgage application data and the broader market index report. Recent readings showed stability, and investors will look for that trend to continue. ADP employment data will also be released before market open on the same day, which often sets the tone for the session. Thursday includes jobless claims and job cut figures, two indicators that heavily influence expectations around consumer strength and labor market resilience. The week wraps up with PCE inflation data and the Michigan Consumer Sentiment Report, two metrics that can sharply impact rate cut expectations. As these reports come out, investors will continue monitoring expectations for the December 10th Federal Reserve meeting. By the end of the week, the market may be leaning toward a 25 basis point cut or possibly a 50-50 probability scenario, depending on how the data unfolds. Strong consumer behavior could lower the probability of immediate rate cuts, while weaker labor data could increase expectations. For example, Black Friday sales reached record levels, with online spending hitting roughly $11.8 billion, an increase of more than 9% compared to last year. While this highlights strong consumer demand, the market sometimes reacts differently, favoring softer labor data that increases the likelihood of rate adjustments. Risk appetite also remains visible in other areas of the market, including cryptocurrency trends. Bitcoin, maintaining momentum, usually signals that investors are still comfortable taking on higher risk positions, which often benefits growth stocks such as SoFi. If this sentiment carries into the week, it could add a supportive backdrop for SoFi and similar companies. Now focusing specifically on SoFi, a notable event is scheduled for December 3rd, a fireside chat featuring SoFi leadership. Historically, the stock has shown positive performance on these event days. While past performance doesn't guarantee future behavior, the market often pays close attention to these sessions because they sometimes include forward-looking insights or updated commentary on strategy and growth. Another factor to keep in mind toward the end of the week is potential speculation around SoFi's inclusion in the S&P 500. The company meets the required metrics such as profitability, market capitalization, and liquidity. The only unknown is whether the selection committee decides to add it at this time. These announcements typically come late on Fridays, and similar situations with other companies, such as Robinhood, have produced noticeable price reactions both before and after the announcement. If anticipation builds, Thursday and Friday could show abnormal upside movement. However, if the stock is not added, a temporary pullback similar to past examples would not be surprising. Short interest remains around 10%, representing roughly 118 million shares. This level has increased slightly, showing that short sellers have become a bit more active, but not enough to signal a major shift in sentiment. Many other growth stocks have seen significant jumps in short activity recently, yet SoFi's short interest has stayed within a relatively stable range. Institutional trading on Friday also showed notable transactions reflecting that larger players are still actively positioning in SoFi. Options data from Friday indicates mixed expectations. The bullish consensus targets the stock around the $30 to $31 range by the end of this week, while bearish positions lean toward levels under $26. Since SoFi closed the week at approximately $29.72, several strike prices below $29.50 ended in the money. That means market makers may need to adjust positions early in the week, which can cause upward price movement, especially on Monday. Dark pool activity shows several meaningful orders late in the day, although not large enough to completely offset the options-related flows. This again increases the possibility of early week upward pressure. Technically, SoFi is currently trading between the R1 and pivot levels with a key support zone around $29.03. If this area holds, attention will shift toward higher resistance levels at $31.98 and then $33.80. The stock recently completed a sharp V-shaped recovery, reclaiming both the 50-day and 100-day moving averages within the same week, a sign of strong buying interest. The 50-day moving average, currently around 28.9, will act as an important support level for the days ahead. Unless significant negative market news emerges, it is unlikely that this level will be broken easily. With no major new analyst ratings since November 25th, the market will likely rely heavily on macro data and technical indicators throughout the week. From a momentum standpoint, if SoFi is added to the S&P 500, the stock could potentially reach new all-time highs. The stochastic indicator remains neutral, meaning the stock has room to move in either direction. If SoFi reaches the 31 to 31.50 range, it would enter overbought territory, which can lead to short-term pullbacks when the first signs of weakness emerge. This is normal and not necessarily negative, as overbought conditions often occur during strong uptrends. Overall, the week ahead contains several supportive factors, not only for SoFi, but for the broader market as well. Positive risk appetite, event-driven anticipation, stable technical recovery, and strong institutional activity all point toward continued momentum. However, with so many economic reports scheduled, sudden reactions are always possible. Market sentiment can shift quickly based on new data, and even a single unexpected development can change the tone entirely. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.